Hi there, Justin from sharepickers.com here. By all means, sign up to the newsletter if you want to receive more detailed information on my penny stock punt. And of course, I'm officially calling it my £1 million penny stock punt experiment. And it is an experiment. I'm going from one stock, putting £1,000 into it, hoping to get a 100% return on that, so doubling my money, and then pulling out, finding another stock, putting that £2,000 in, doubling that to £4,000, so on and so forth. 10 trades takes you to over £1 million. Now, it is an experiment, and I'm learning. It's trial and error, so I have to learn from my errors, and that way I'll hone in the experiment. Now, I bought 2 stocks this week, which I shouldn't have bought, but one I think I may be holding long term, and one is just a penny stock punt. And this one is the punt. African Potash, AFPO. Now, as you see, this is a 6 month chart, and it's been, up to over 1.4 within 6 months. That's one of the things I look for in a stock. I look to see the range it's traded in the last 6 months, and if it seems like it's nowhere near, if it can nowhere near double its money from where it is now, looking at the last 6 months, if it's been nowhere near that doubling target, then I pretty much don't look at it because I don't think it'll ever go there. So as you see, it's African Potash, AFPO, has done this. It's been up to 1.4 pence for the last 6 months. At the moment, it's at a low. Now, you can see here, we hit a bottom at spot 4, and it's a rising trend channel here. They've been lower. They've been at, let's have a look here, they've been at, spot 275. So it's dipped to that. It peaked at that. It bounced straight back up, as you can see, like a cork in water. It really didn't settle there. And so you can say, spot 327, which is around about the placing price. They had a placing recently, and as yet, but there are a lot of higher lows here, which is a good thing. So the lows have become higher and higher, and they've basically crashed its head against the 50-day moving average. So you can see a bit of a wedge forming here. So it should be a breakout happening very soon. And as you can see from the relative strength, it has been building. From back here, it was down at down at almost naught. And then building up past 20, building up past 50. And that's the magical number, really, 50. If it trades between 50 and 70, that means it's not building nicely. It's at a temporary dip, but still, it's still rising. So what we need really is to tick up. So I bought this wrong, and I'll show you why. If I can zoom in further here. Oh, it's not flatten it. I want to bring it out. So let me just bring that up. So as you can see, this trading range here. Let's just put a line here. There's a trading range essentially here, isn't there? And it's between spot 5 and we're about in the last few months, and about spot 3.6, or let's go up higher, and spot 3.7. Now, I bought at a false breakout. I think it was here where it touched the 50-day moving average. As you can see, I bought there, so it's at 0.47. I think I bought 0.48, and it's come back down now into this trading range, and so I'm about 18% down here. Now, what I should have done is put a limit order in at the bottom of this trading range, so it'll touch, say, somewhere here, and then I could put a stop loss in 10% below that. So I know it hasn't gone below that in the last 2 months at least. So if it goes below that, it's a good chance it will go lower. I could have done that. I didn't though. I put it at the top of the trading range here, and now I'm 18% down. So I should have either waited for a breakout above the 50-day moving average and for it to stay above that, a close above that, and then buy there. Or I should have bought at the bottom of the trading range and put a 10% stop loss in below that, just in case we went lower. I didn't do either. I bought at the top of the trading range. So as it is, I'm down on this investment by 18%. But like I said, it's an experiment, and it's about the biggest problem I've got to face here is my timing. I get caught up emotionally, and I buy on emotional impulse. How to avoid this, as you can see in the document there, sign up to sharepickers.com, is by putting predetermined orders in at a technical level that I'm confident with, and then just leaving it, let it get filled. Don't mess with it. Let's go to the stock I'm going to look at, and this is PROX, PROX, and I quite like this as a long-term hold. It may not be in my penny stock punt portfolio. Again, I bought this the wrong. This is a little different from African Potash. It's already broken out. Okay, we saw it hit a low here, hit the bottom. The lowest it went was this period here, what was that, 1.325, and then you see it went above its 20-day moving average, but this point here gapped up above the 50-day moving average. That is where I should have bought. When it closes above a 50-day moving average, and it hasn't done that, look, I mean, this is a 6-month chart, and when's the last time it did that? Well, let's take it to, even a year's chart. Let's have a look. Okay, so last time I did that was here. Doesn't bode well there, though, but I think that we've had a bottoming process coming here. So it gapped up there, and it went from 4 to 5.5. So, I should have bought that. Even then, though, that day, look, it gapped up above that 50-day moving average. You'd have bought there at below 4 and went above 5. So that's what I should have done. Bought the gap up above the 50-day moving average. What happened was I bought here, the second gap. So gap there. I bought here at 188. I'm still sort of 5% up, but I still bought too late. So in African potash, I bought too early. And in PROX armor, I bought too late. Now, it's all about learning. Like I said, it's an experiment about learning when to buy. And hopefully, I'll learn from these errors. And hopefully, I'll fulfill my aim in the experiment later on. But I hope that helps in some way, just showing you these charts. As you can see, the relative strength is building here as well. And the MACDs have converged here and are building. And they've got it above the 0, which is quite nice there. And converged there, or diverged there. So those are the two charts on the penny stocks I bought this week. One of them, I think, may be a long-term hold. We'll see. But I'm honing in my micro purchasing power because at the moment I haven't got it right on both stocks. And hopefully I will get it right. If you want to receive more information on these stocks, please go to sharepickers.com and sign up to my email newsletter. Thanks for listening and watching. Bye-bye.